can you have a come do business in America, bring me your money, bring me your business, and a dollar at a 3-year low?
You know, I think that what's interesting about the dollar's performance recently is it seems to be more correlated to growth differentials with the rest of the world as opposed to interest rate differentials or really what's happening in our own domestic economy. So, you know, I think that this you can explain what we're seeing here in the form of a weaker dollar, but longer term, a strong economy would suggest a strong currency. So at some point, one of these forces are going to have to give. Either you're going to see the U.S. continue to outperform the rest of the world, that could push the dollar up, or the rest of the world is going to keep growing at a robust clip, and I think that's going to pressure the dollar lower.
Jim, what do you think?
I'd agree with those comments, and I'd add to it that if you were to put your trading hat on and look at what the trading positions are, it's really over-speculated right now, negative dollar, positive currency. We've got some record net long positions in the futures market, which is a proxy for the thinking among institutional investors. So the hot money is very, very negative on the dollar. And typically, this is what happens when you get a major turn. It gets overdone, and then you wind up going the other way. And right now, I'd say it's overdone. I don't know when the other way is going to come. I thought it was 3 weeks ago, but maybe it will come fairly soon.
Jim, there's two things that the president seems very interested in, and I'm curious if at any point they're going to come into conflict. One is that stocks always go up, new records every day, very important to him. And two, the trade stuff, which when he talks about that, that's the one thing that sometimes makes markets a little nervous, and there'd probably be some anxiety if the NAFTA talks went off the rails. Do you see these two things eventually coming into conflict, or can the needle be threaded?
I think that they're somewhat related to each other. Stocks, let's take that one for starters. I think what the story of 18 has been is analysts have been rushing out of their office, aggressively upgrading forecasts. We have got, as we've measured it right now, between 2017 and 2018, a 36% rise in S&P 500 earnings for those 2 years. The S&P's up 30% over that time frame. Actually, if we stopped going up, we'd actually have multiple contraction over the last 18 months. That's because of the booming earnings. Now, the question is, are the analysts right to have such an aggressive forecast? I haven't found one in at least 15 years that they've been this aggressive with it, and that might come down to the pace of the economy and the pace of of the other economies and the relative position of the dollar. And so that's going to be the open question for 2018, is whether or not these aggressive forecasts that the markets seem to be pricing into actually happen.